Hi Tim. So this is a tricky assignment where we will be creating profitability budget using our income statement analysis. In the last term, like when we are working on similar kind of financial analysis, we were used to perform analysis on these assumptions. Okay, whatever the assumptions that we have here. Using these assumptions, we used to prepare different type of budgets. See, your profitability budget includes budgeted. This is a budgeted income statement. It contains a production budget, direct materials budget, direct labor budget, overhead budget, selling and administrative budget. These five budgets will come under your budgeted income statement. So this is your budgeted income statement. So mostly we will be using our own income statement and balance sheet for the purpose of performing analysis on this one. Okay. So let's make it simple. I have one analysis. This is one analysis, last week analysis, which consists of income statement, balance sheet, cash flows. In the last session, like in the last week work, what you have done is you created profitability, liquidity, leverage ratios, and you also performed interpretation on all the values. Now these say the same value should be used to create your budgeted income. So like in previous term when we are working on assignment, we were given 4 months amount, 4 months values, and based on which we performed budget. Now we have 3 months. So here, even if we have 4 months values in the previous term, we consider only three values. So for month one, month two, month three, and we performed a quarterly budget. Okay. So like that. In the previous term, we used to work like that. So now we have year one, year two, year three values, and using which we are supposed to create our own budget. So what we should do? So come to this page. So just check selling price. Usually you won't get selling price from income statement or cash flow analysis. Usually uh, income statement, balance sheet and cash flows, they show total values. Say for example, here we are having maybe material, direct material budget. Okay, so we will be providing in what way? We will be estimating total production, total number of units we are producing, and for each product, how many materials is required. So based on the total materials required and the starting entry, ending entry that is required, based on which approximate material that is need to be purchased, which will be multiplied with the unit cost, and we will be getting the cost of material. So this is ultimate cost of material that will be calculated as a part of direct material purchase budget. Got me? So this will be ultimate value that we are going to create. So most often what happens, this value will be shown, this value will be shown in your income statement. So if we go to income statement and cross check this income statement under operating expenses, you will see selling expenses, staff cost, wages, general administration, selling and marketing. Like this, you get a lot of expenses. If you don't find material, maybe go to balance sheet. Here you can see raw material. See, this is the area where you get in balance sheet. You will be seeing raw material, consumable supplies. So for every year, the value is given. Okay, straight away take these values, raw materials, and this is work in progress. For every year, there is a work in progress. And finished goods and merchandise, inventory, allowances, and so we don't need that one. But try to take the value of raw materials and work in progress collectively. Maybe if it is a difficult thing, just take raw materials and consumable supplies. This value you need to include in the budget here. Cost of material. What is the cost of material? You take two values, maybe work in progress value and raw material value. Take two values and add it up. So we don't need all these values to be present here because this is all not required. So for year 2022, 2023, 2024. So what we have, material costs. What is the material cost that we have? So just take this one and paste it here. or else here. Okay, so and this should be a number. And another one is this value, year 2 value, and year 3 value. So now your direct material budget is ready. So for the year 1, the budget is this much. So year 2 budget is this one, and year 3 budget is this one. So you don't need these many columns, so you can remove it. And this statement you are supposed to finish at last. Okay. So your direct material budget is finished now. Now let us take direct labor cost. Direct labor cost speaks about how many labor are there and how many hours they are performing and what is the total labor cost that we are getting. So again, all these details they won't mention in income statement and balance sheets. They straight away mention total wages and salaries they paid. So let us come to here. In this page, just check salaries. This is not the page. In the income statement, you can see wages and salaries. So where is that in the income statement? Staff costs, wages and salaries. This is the value. Don't take negative values. The value that is paid. Usually because of for the calculation purpose, here it is seen like minus because it is a negative, like it is a removing value from the total revenue. So that's why they took minus, but it should be a positive value. So now I'm copying it and coming to the direct labor cost, I'm just pasting it and this should be a positive value, not a negative value. Okay. So next for next year 2, what is the value 2023 के लिए? So this is the value. And I'm rowing minus. And final value is this value. So now I'm taking this value, format cells, and this is number. Okay. And I don't need this month 4. Remove year 4 in all the pages. We don't need this. Okay. So we don't need that actually. So chalo, like we are getting REF, right? So let us see. So this is required production. What should be the required production? So for this purpose, what we do is we take inventory of the present year. What is the total units that are produced? So we will get inventory value. So like mainly this is production budget. It is difficult to calculate because we don't have any inventory count. So here it is not the value, it is number of units that are producing. So ignore this one. At last I will discuss about it. So we have a direct material cost. Next, this all are rubbish. We don't need anything of this one. And we have our total labor cost for every year. Next, overhead cost. So just cross check cost of overheads, staffing, marketing. We get that maybe in balance sheet. So inventory, supplies cost. So just search for these things, maintenance and repair. In any page, you can see, check that if that value is available, just take it. Control F maybe MAINT, maintenance. Not there. In balance sheet, I am searching for it. Income statement, maintenance, maybe supplies. Now here, supplies is not directly given here. See, search for these values, okay, these numbers. You will usually get supplies and repairs, utilities, these details in your sheet. If any of these values are not seen, make sure you calculate it from total annual values. Maybe like from the inputs, whatever the values, total revenue values. So here you are supposed to give revenue values, these in this area. Actually, here it is not available, right? So wherever we get, this is a if it's sales budget. Where is sales budget? Selling total sales commissions directly. Production budget. Production budget. Where is this? Okay. Maybe from inputs they took it. Here total yearly sales. This should be yearly sales. So sales cost. Maybe this is unit cost they took and total revenue. There is no change in these two values. Both are same. So remove this one, removing this one, and the sales budget. I'm removing this one. Maybe anywhere we are using it. Sales no. We are just accumulating all the data in this page. So I'm removing this one too. And okay, sure. Let's keep it. Total sales or yearly sales. We like this. And I'm taking sales value here from income statement. We can get from income statement the total revenue is, other revenue is also there. Total, this is total revenue, other revenue. There are two things here. So let me take both the values. Okay, maybe this one. Um, this value, and for year two, this value. I'm taking revenue values, and this is for the year three. This is total revenue, total sales we got. This is the total sales value, and in direct materials we are having this table. We don't need all these, so I'm removing this. Delete. We are having cost of revenue like this. Now, next we have direct labor cost. This is our direct labor cost, that is calculated one. Um, Removing this one. Okay, so this is direct labor cost. Now we have overhead cost. So let us assume key overheads, because we didn't get. If we get any supplies values, we will be giving values here and we will adding up in total. If there is nothing, now we give some percentage. We assume in the same manner in the input sheet, we should make some assumptions like labor supplies charges. This should be the supplies charges, and this should be commission on sales. Like that, if we don't get any value, we will be using some percentage on sales. Say for example, this is 0.2%. I take assumption. You can take 0.4%, 0.15%, or 0.015%. Here it is 0.02%, right? So I will be multiplying this with supplying charge. On this one, I am multiplying it with 0.02%. So this will be the value, and this is 0.1% is equal to this sales value into 0.1%. And on this one, maintenance 0.03% is equal to. So these are assumptions. You can keep whatever the values you want, and they are given in inputs page here. So using which we are supposed to multiply. Say maybe like this is equal to this into inputs, and supplies is 0.02. Okay, got it. So I have multiplied with supplies, right? Next, if I take like this in sequence, we are having all the values. 0.1, sorry, this is equal to this value into assumption value production inspection, and this is equal to this into maintenance and reports 0.3%, and utilities is equal to this into 0.01. So now these values are actually assumptions. Okay. Variable overhead amount, this will be total of fixed overhead amounts. We can assume this one to fixed overheads because we don't have any data in the income sheet, right? So these values we assume, and we also assume fixed overheads. So this is in total of this one, we will be calculating it, some curly J, right, some, and this is total amount for this production. This variable costs are incurred. Okay. Now we calculate this one, and we also assume that here fixed overhead, fixed expenditures monthly is 0.03%. Okay, let us take this one to 0.03%. So now what we do is this is equal to this value into total revenue value into percentage of fixed expenditure. Now total overhead cost will become, this is equal to variable overhead plus fixed overhead. So now I have the value. Okay. Similarly, we calculate it for all the months. For this month, this month, and this month. For every month, we will be calculating it. And we sum up everything. Okay. This is equal to this plus this plus this. All these values we calculate. See, it's a simple implementation of the current values in the previous monthly budget sheet following the structure. Now, for the selling and administrative building costs, what is the cost we are having? So let's do it here. It's better. So variable selling and administrative expenses and fixed selling and administrative expenses. We have these many values. Selling and administrative, general selling and administrative. So this is supplementary values, I guess. So now selling and marketing expenses. We have total like lot of expenses. This all come under maybe this value, selling and general administrative expenses. Okay, so now we take this value. Now what we do, we take this value under this one variable like total selling and administrative expenses, simply copying it and pasting it here, and copying second one and pasting it here. So make sure they are not negative, and copy this and paste it here. So like this, these all are values. Format cell and make it number. Okay. Now we don't need all these things. Okay. Fixed administrative expense, you can take some reference kind of thing. Again, you can make some assumption like this value will be fixed administrative expense. What is given here? This is the value, right? We make it 0.5%, 0.05%. 5% is the fixed and administrative. This is assumption. We just make an assumption. So because of which we get a calculation of input of this one means 0.05% into total yearly sales value, and here fine. Okay, if I into this value, now when we drag it towards the right, you will get this value. So make it I will copy these three values here and I will paste it here. I will call it selling and administrative expenses and fixed selling and administrative expenses. We need to add up these two things, this plus this, and this should be positive, not negative. And this should be positive, not negative. And this should be positive, not negative. Now we add up all three things and we got a total administrative and selling expense. If you check in the budget, you got all the values. Selling and administrative expenses, which are not required fields that are existing in this, that will be removed. Okay, so now you have fixed selling and administrative expenses. Now you have variable expenses. Again, this should be we should make it a fixed one, inputs value, because our assumption should be fixed so that whatever the values we drag that should reflect. This is some, that's fine, and this one should be again static value. Okay, now what we do, we drag them towards right. Okay, this is again, this should be right. So this is the value. Now we have total sales that we got. We have total direct material budget, direct labor budget, overhead budget, and selling administrative. From the input sheet, this is not required as of sensitivity analysis. So now, what is this difference? So possibly these are the values that you can get mostly. Okay. So you get direct yearly sales, which is a total revenue value. You need not to worry about it. From that cost of materials you are removing. From the total labor cost you are removing. And variable costs you are assuming these things because we don't have exact, we usually don't find exact values for these things. They collectively they will be part of some element in the income statement or balance sheet. Next, you are having selling and administrative expenses. That those expenses should be calculated, and you will get profit like this. This is the actual revenue you made, and these are the costs. Okay, so for 3 years, you have created a profit budget. Okay, got it. So now, what is the question that was asked here? So after preparing this one, you have a peer review questions. Are the numbers in the budget realistic? Supported by clear. So you need to write a short paragraph on this one in your projections. Next, for your peer review question, or the numbers are in the budget are realistic and supported by clear and reasonable assumptions. Yes or no, you should mention. It is realistic, right? Because from your balance sheet and from your income statement, you took all the values. So they are mostly realistic. Point out any specific areas where you have concerns or questions. Then you speak about production budget. So production budget is not very much clear, right? Because so what should be how much numbers we can produce? What is the inventory numbers? Number of products that can be maintained by the inventory that you cannot uh, provide detail related to them in your sheet because of not present non-presence of such data in your income and balance sheets. So in that area, production budget to make clear create a production budget, it is a difficult thing. Okay, is understand and follow. If is the video audio presentation easy to understand and follow? Does it explain? I'm sorry. So these questions, uh, while we are providing peer review, means you will be submitting this document, and the others who will be submitting such a kind of documents, on that these elements should be discussed. Okay, not your discussion question. Okay, so here you are supposed to create the budget, and you are supposed to write 100 votes, 100 to 150 votes on your assumptions. Okay, the budgeting decisions you made. How did the financial data of week to inform your projections? What assumptions did you made about income or expenses? Why? This should be your work actually. I'm really sorry about it. You need to provide 100 to 150 words on this document, and you should finish everything. Okay. While writing comments, you are supposed to discuss these things. Okay. So I hope you understood. Uh, Complete your work. Thank you.